What up, everyone? I hope everybody's doing well. I hope everybody had a good weekend. Welcome to 2023. Anytime there's a new year, there's a new set of goals and another attempt at success. So, saying that, I want to let you know that I am giving away $5,000 to the first place winner in the Jedi Compound 2023 trading competition. The rules are very simple. All you have to do is, number one, join the Discord. The link is in the description, and that is free. Number two, join the competition. That is free. Number three, you can use any strategy, any style. All you have to do is beat me and get first place in the competition. And you have until December 31st, 2023 to do it. Now, it won't be easy. Last year we had a competition and I had first place by a long shot. I only traded for 6 months because I was really far ahead. I turned 1 million to 15 million using my strategies and just basically stopped trading about 6 months in. This year you have a new attempt to try to beat me, and the winner will get $5,000. I'll send it to you. So just come in the Discord and you can get the password for the competition and everything right in the announcement area. It's free to anybody in the public. You don't have to be a subscriber for any courses or anything. It's completely free. There's no risk to you, only risk to me. Good luck. Okay, just want to mention I got 31,000 subscribers on the YouTube channel, which is cool. So I started my YouTube in September of 2021, so about 15 months ago. It hasn't been too easy, especially in the bear market, but we keep going and we stick to it, and we don't quit. We just persevere and push through, and the goal is to educate and teach on this channel so that you are better informed and can make the right decisions for yourself. And so that's what we do here on this channel and in the Discord. So today I just want to go through some crypto news that's going on. One of the OG core developers behind Bitcoin was hacked. I want to go through some of the reasons that Vitalik from Ethereum is bullish on 2023, and some data that is out that shows why boomers are making better investment choices than other generations, which was interesting to read. And Australia beats El Salvador in having more ATMs for cryptocurrencies in their country. We'll look at some other crypto news, including top funding stories of 2022 and more. So, saying all that, welcome to the wheelhouse. And guys, don't forget, I film in 6K. I scale to 4K. So all you got to do is just tap the video, and then top right corner, there's a cogwheel. You can go to advanced settings and go to 4K. I also have advanced audio settings for dynamic surround sound for you guys that have a surround sound system or earpods, which is just kind of cool. And after that, if you wouldn't mind, just hit the subscribe button and the like button, make a comment right below the video. And we do have a Twitter, an Instagram, and of course the YouTube. So please subscribe. I really appreciate that and really appreciate you watching and coming to the channel. And if you have any questions, you can come in the Discord, or you can make a comment here on this video, and I'll try to answer you as quickly as possible. And let's go ahead and just get started with some of the crypto news. All right, so first up, we have Bitcoin core developer claims to have lost 200 plus Bitcoin in a hack. A Bitcoin OG and core developer claims his PGP key was compromised, resulting in virtually all his Bitcoin being stolen from him on December 31st. One of the original core developers behind Bitcoin, Luke Desher, claims to have lost basically all his Bitcoin as a result of a hack that occurred just before the new year. In a January 1st post on Twitter, the developer said the alleged hackers had somehow gained access to his PGP, pretty good privacy key, a common security method that uses two keys to gain access to encrypted information. In the thread, he shared a wallet address where some of the stolen Bitcoin had been sent, but did not reveal how much of his Bitcoin was stolen. He told a user in his most recent Twitter thread that he had only noticed the recent hack after getting emails from Coinbase and Kraken about the login attempts. The incident has also caught the attention of Binance CEO CZ, who offered condolences and support in a January 1st post. Some in the crypto community have speculated that the lax security might be to blame for the loss. In a January 1st Reddit thread, a user calling themselves Sat Standard suggested that he may not have taken the November 17th security breach seriously enough, and later suggested that the Bitcoin developer did not keep different activities separated. The news has also ignited a debate about self-custody, which became a hot topic after the collapse of FTX last year. So yeah, this is a shame. I'm not exactly sure how it happened, but I personally just feel that after the FTX situation, regulation's gonna come. We all know that. But everywhere I look, all I see is hackers and spammers everywhere. And I just feel like they're just adding to the regulatory scrutiny that is coming, because there's just so many hackers out there, and you just keep seeing articles and situations happening constantly. I see it in my YouTube comments, people trying to scam people. So don't reply to these people, and don't ever give any personal information away, guys. Let's look at the next article here. So this is interesting. Australia overtakes El Salvador to become the fourth largest crypto ATM hub. El Salvador's position as the fourth largest crypto ATM hub was short-lived as Australia stepped up its game over the following months. And right here it says new research indicates boomers make better crypto investors. Boomers do significantly more research before investing in cryptocurrency than their younger counterparts. They are taking research methods used in the traditional markets and applying them to crypto projects, according to a new report from Bybit and consumer research company Tuluna. The report says that 34% of boomers spend a few days doing due diligence on a project before investing, 50% more than other generations. Boomers are also more likely to focus their research on technical factors such as tokenomics, revenue, and competitor landscape. This shows that being a digital and crypto native is not as big an advantage as people think. It actually pales in comparison with some of the Warren Buffett style skills that older investors have honed over the years. Maybe boomers are more likely to be retired and therefore have more free time than younger generations. It's really hard to say, but it seems the best way forward for young people is to get humble and learn from the oldies. Even though crypto has many idiosyncratic properties that differentiate it from other capital markets, it still has enough in common to allow for a decent crossover in analytic skills. After all, the price of digital assets is highly dependent on the balance of market supply and demand, just like traditional markets. So some of the top crypto funding stories of 2022. Now, 2022 was a record-breaking year for blockchain and crypto venture capitalists, depending on who you ask. That's either a good thing or a bad thing. 2022 was a watershed year for crypto venture capital, as investors poured tens of billions of dollars into blockchain-focused startups despite the overwhelmingly bearish trend in asset prices. Is the VC-dominated crypto funding model good for the industry? Well, only time will tell. Now, Cointelegraph Research is still in the process of tallying all the funding figures for the year, but 2022 easily outpaced all other years. In terms of total capital raised and deals completed, VC inflows were above $14 billion in each of the first two quarters before receding to just under $5 billion in the third quarter. Still, an impressive tally given the industry-wide contagion sparked by the sudden collapse of Celsius, Three Arrows, Genesis, BlockFi, and FTX. So here's an article worth mentioning. U.S. lawmakers could consider stock trading banned in next session of Congress. All members of Congress are already required to report most investments in stocks and cryptocurrency, but many have pointed to potential conflicts of interest. Many United States lawmakers from both sides of the aisle have at one point expressed support for legislation banning members from investing in stocks or cryptocurrency, an initiative the 118th Congress could address following a shift in leadership. Beginning January 3rd, as the next session of the U.S. Congress opens, Republicans will take control of the House of Representatives with a slim majority following the 2022 midterms, while Democrats will maintain a majority in the Senate. Kevin McCarthy, a Republican representative, is in contention to be the next Speaker of the House. Reportedly, said in January 22 that he would consider an outright ban on lawmakers holding and trading stocks, a measure that presumably could extend to crypto should his party flip the chamber. New year, same old troubles. The FTX saga continues in 2023. Having been granted the opportunity to enjoy Christmas and the New Year with his family, former FTX CEO Sam Bankman-Fried has very few reasons for optimism in 2023. The United States Department of Justice has launched an investigation into the whereabouts of approximately $372 million in missing digital assets from FTX and its US-based subsidiary, FTX US. According to Sam Bankman-Fried, the incident was perpetrated by either a former FTX employee or someone who had unauthorized access to a former employee's computer. It would be great to know which former employees started to transfer out funds from Alameda Research just days after Bankman-Fried was released on a $250 million bond. The Alameda wallet was found to be swapping bits of ERC-20 for Ethereum and Tether, and then those assets were funneled through instant exchangers and mixers. Sam Bankman-Fried later denied any involvement in the movement of funds. While the government agencies are queuing to sue the FTX and its founder Sam Bankman-Fried, the group of former customers made an effort to get their money back first. Having filed a lawsuit in the United States Bankruptcy Court for the District of Delaware, 4 plaintiffs seek to obtain the priority rights to return digital assets held by FTX or FTX.com to its customers. And it says right here, Sam Bankman-Fried's Alameda Research troubles predate FTX. Sam Bankman-Fried had claimed that the operations of FTX and Alameda were independent, but the recent lawsuit has revealed that both firms worked in conjecture from day one. New reports into Sam Bankman-Fried and his collapsed exchanges revealed that Alameda Research, the now bankrupt crypto trading firm, almost collapsed in 2018, even before FTX was in the picture. A report published in the Wall Street Journal citing former employees revealed that Alameda incurred heavy losses from its trading algorithm. The algorithm was designed to make a large number of automated and fast trades, otherwise known as high-frequency trading. However, the firm was losing money by guessing the wrong way about the price movements. In 2018, Alameda lost nearly 2/3 of its assets due to the price fall of the XRP token that was in a blink of a collapse. However, Bankman-Fried reportedly managed to rescue the trading firm by raising funds from lenders and investors on a promise of returns of up to 20% on their investment. Later in April 2019, FTX was launched with a promise to offer a safe haven for institutional investors. With the launch of FTX, Bankman-Fried used Alameda to fuel its growth as the trading company became the major market maker for the exchange. It was always open for other traders to purchase from and sell to. People familiar with Alameda's tactics claimed that the exchange occasionally adopted the losing side of a deal to draw clients. And then I wanted to go over this. It says, trouble brewing for the US. 2/3 of TradFi expects a 2023 recession. According to recent research, major financial institutions tied to the Federal Reserve see the US facing a shallow or mild recession in 2023. The United States economy could be in for an upset. Data from a Wall Street Journal survey revealed financial experts expect the country to face an economic downturn this year. Over 2/3 of the economists at 23 major financial institutions that do business with the Federal Reserve believe the U.S. will have a shallow or mild recession in 2023.